All right, everybody. Good afternoon. Here I am. I am still an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's my position disclosure, still very light. Coming back from vacation, first day back from vacation, so pretty light. Like I said this morning, I'm not in a rush to start adding a ton of exposure with where the market is and with everything that's going on. But really quiet day today. Let's jump in and talk about today. Let's talk about the big picture a little bit as well. So the S&P finished pretty flat, up 0.08%. There was no gap really this morning. We opened flat, we closed flat, so nothing really at all to talk about with the S&P. The NASDAQ closed down 0.45%, or 0.49 or so, I guess. This is pretty much exactly where we opened. Q's gapped down this morning by about 0.5%, and they closed down about 0.5%. And the IWM was relatively strong pre-market. The Russell was gapping up this morning when the Q's were gapping down. But the Russell here, the IWM, also closed up by about the amount that it gapped up at. So pretty much all three of these major indexes that I like to look at closed exactly where they opened. IWM at the pre-market relative strength, QQQ with the pre-market relative weakness. There was no follow-through in either direction for this market. The market itself, though, this is a bullish digestion day, really. I was away for the last 2 weeks. I missed 2 pretty wild weeks. I'd say probably was the most boring day of the last couple weeks. Heavy sell-off, bought all the way back. Wednesday last week, marking a really, really big day. It was the CPI day. It was also the day when there was a lot of commentary out of NVIDIA, which helped to really turn this market around and lead it higher. But we are back in the S&P to a hair away from highs. The market after last week's move, really the Wednesday, Thursday, Friday move in the market, got us a bit extended to the upside. On Friday had highs. The market was approaching what we consider to be extreme extension on the upside, though we never quite got there. And then this morning with the flat open, gap down, it just lets this market digest that extension. It lets this ADMA catch up a little bit more. So as of today's close, the S&P, the SPY here is trading at 462.50 with the ADMA at 456.50. So that gives us about $6 of extension. That ADMA will catch up a little bit further tomorrow. So what I said this morning for the SPYs and the Qs is that we were kind of opening up in that no man's land, that space when you're $5 to $10 away from the ADMA on the daily chart is typically what I consider to be no man's land. We don't have a really strong risk reward for doing a lot of new buying. We don't have so much extreme extension that we can feel confident to come in on the other side. So the market technicals themselves were already telling you to be patient. If anything, my thought process was leaning towards the short side, but needing a setup for that. And the setup that I would have liked would have been some sort of RDR, where we get above yesterday's high in a day 4 and then come back down, coupled with more extreme extension where the SPY or the Qs are becoming $10 away from the ADMA. I never got that. So given that I never got the setup, even though my inclination was to be leaning a little bit more to the short side than the long side today, it never set up. So I pretty much never did anything with it. I did take some day trades to the short side in NVIDIA and the Qs, but they were just really more small time frame, lower risk, scalpy type of trades that made me a few dollars. So the digestion day today is bullish. It lets the ADMA catch up a little bit further. It satisfies some of the upside extension that you have in the SPYs and potentially begins to set up the market to break out to new all-time highs. It's hard to look at this chart right now and not view it as bullish. If you scroll out a little bit, you can see that we're kind of building ourselves a little bit of a bullish ascending wedge or ascending triangle, with a higher low on the pullback that you guys dealt with about a week ago versus the real VIX positioning blow up that happened at the beginning of August with the low that came in down there. So overall, these technicals are looking really very bullish. even as there's a moderate degree of upside extension. But with that said, we've got the Fed on Wednesday, which can change this picture very rapidly. We could break this market out, or it could change this picture rapidly on the bearish side. Hard to know exactly what the Fed's going to do, and even if you did know exactly what the Fed's going to do, it'd be hard to predict what the reaction is. We're pretty much guaranteed for a cut on Wednesday to set off an easing cycle. It's just a matter of whether or not it's 25 basis points or 50 basis points. I've been in the camp that I think it's more likely to be 25 basis points, but the market itself is pricing in a 60% or so probability of it actually being 50 basis points. So we'll see. And then the next question, we can talk about this more tomorrow, is how does the market react on that? And I'm just inclined towards the bear side of this thought process right now, which, historically I tend to be more of a bull, but I'm inclined more to the bearish side of this thought process, especially with the market being at highs going into it. Obviously, we'll see what that reaction actually looks like, but I think a 25 basis point cut could have a bearish reaction for the market because we're pricing in more than that already. So, we don't meet those expectations and they're a little bit hawkish and we sell down. But a 50 basis point cut, I think, could also be met by selling, just because you got to scratch your head and say, what does the Fed see about a weakening economy or weakening employment to the point where they're required to cut 50 basis points? Because historically, they only really consider doing 50 basis point cuts, especially as a first cut, when you're really in the throes of a recession, which we're not. We're currently not in a recession. So we'll see. That's set to happen, obviously, on Wednesday. There's a good chance that tomorrow is also a slow day, just being the day right in front of the Fed. So but we'll take care of all that tomorrow morning when we do the morning meeting and we see how we gap. But my expectations are not looking for any big movements tomorrow. And my thought process does to lean to the bear side right now, especially the other major factor is just kind of seasonality here at the end of September. This tends to be one of the weaker 2-week periods of the year, if not the weakest 2-year period of the year historically. Someone needs to fact check that for me. I know it's somewhere up there. Really, it tends to happen, especially post OPEX. Post OPEX, which is going to be Friday this week, potentially opens us up to another pretty big liquidity drain on this market. The difference between this time and August is August we had a lot of strong buybacks going on still from the corporates, and the data actually shows that they bought a lot in August. And now this time around, as we're approaching OPEX and the Fed this week, and then post OPEX, we don't have corporates buying in the same way anymore because they are in a buyback blackout window in front of the upcoming earnings season. So we'll see. A lot of boring action today, potentially boring action tomorrow, but don't get too relaxed because we're right in front of a lot of things that could trigger some bigger movements. And the way that lower liquidity sometimes work in the market can be twofold. If we break up, you could break up in a big way if you get to new all-time highs and get this market going. But the opposite is also true if we were actually able to break down. I think there's a lot of potential fodder out there to get this market to really begin to move lower. So we'll see. Again, I'm personally I took off so much risk before I went on this vacation. I kind of felt like I needed a mental reset, which I totally got. So, I was trading huge in July and August, and going into that trip, I just decided, hey, let me just reset things a little bit. I got out of all my shorts. I got out of, 60, 70% of what I was long at the same time. And honestly, it probably cost me a whole lot of money, but that's not the right way to view things. The way to view things is just where I am now, and I'm trying to view it as a positive, even if it probably cost me a bunch of money, because it gives me the opportunity to actually kind of reset in a way that I haven't in years. I haven't done what I did at the end of August into this vacation in a really long time, which is, I didn't liquidate to flat, but liquidated by so much that it almost feels like I'm flat to me. though my P&L is obviously still moving every day. I think that pretty much kind of covers it. So that's the SPY. See if there's anything to talk about with the Qs. Not really. The Qs gapped down. They're relatively weak. They traded lower off the open with some opening weakness from Apple and Nvidia, but then that got bought back. And like I said earlier, the Qs pretty much closed where they opened. So you have a little bit of a downside tail into the ADMA on the Qs, and that leaves you with like, I don't know, $4.50 of extension. I'll be even less than that tomorrow. So the Qs are not really extended at all at this point. And the IWM, in some ways, is the most extended to the upside, but it's also the sector that I would be most bullish on, or the index that I would be most bullish on going into cuts. I kind of still like the idea of a pairs trade right now of short Qs, long small caps, and mid caps. Because I think that will be the benefactor of a rotation trade on these cuts, but we'll see. And in conjunction with that, I still kind of like XBI long, but it needed to reset up after a really big day on Friday. I kind of like gold and these gold miners long, but that also needs to reset up after a big move on Thursday and Friday back into $40 resistance on this GDX. So there's some things that are out there that I kind of like that I like for rotation, but broadly, I'm not super bullish on this market right now, and I'm kind of in wait-and-see mode as we get through the Fed on Wednesday and just some of the weaker seasonality that we are working through here at the end of September, and October tends to be a little weak on election years as well. So just not in a rush to really re-expose myself in a big way on the long side. Pretty much covers all that I got. Again, took a couple cute day trades in the beginning of the day. Apple long off lows I think I bought it in the beginning of the second bar when it first opened, a little bit above 214. I was out of that pretty quick for just a trade. I tried shorting Nvidia, and I pretty much got stopped out as a break-even trade at the high of the day. Yeah, there was a high. It put in a high, which you can't see on the 5-minute chart, at the 10-10 candle at 118.11, and I shorted versus that, and I got stopped out at like 118.13 with a couple pennies of slippage. The high of the day is 118.18, so then that trade kind of worked without me. But at the same time as that, as I was looking for the Nvidia pullback, I shorted the Qs with it as well, and luckily the Qs didn't breach this 9:55 a.m. high, because that would have stopped me out, and that trade worked out pretty good, and I liquidated it as it approached lows. So just a couple cute little trades, and then scalped this Intel long after hours when that news hit. So shout out to the team, shout out to Bill for getting the news into the VTF there real quickly. I was able to scalp a pretty good price on this. I bought under 22, kind of on the way up there, and was all out by 23. Intel was probably the idea of the day today. It was already on the list this morning to go long off the military contract news that it had. That trade worked out pretty well. If you bought that off the first 5-minute bar, it looked like several of you guys did, so I'm happy to see that. I did not get involved. Again, just trying to be a little bit patient on a lot of new trades. And then if you swung it because it closed well, and it's a good idea to swing these things sometimes when they close well, I'm glad to see that Rex did. You're getting lucky by getting this news coming out after hours with Amazon that's ripping it up another couple bucks or so. So great stuff on Intel, probably the trade of the day. That's all that I've got, which isn't too much. Happy to answer any questions anybody has. Not seeing anything in the VTF yet, but feel free to post. I'll log into the YouTube here at the same time to see what's going on over there. Thanks, Daddy Trades. Yeah, I like XBI long also. Uvixi Bull has a question for Pat. He probably forgot that I exists. I found out over the weekend that BITO does have a drag associated with it. Yeah, BITO, I knew that. That's the first one that they ever created. This is the one that's based off the futures product, right? Yeah, BITO has a degree of decay. Yeah, this one is a degree of decay. So I usually prefer to look at, what is it, IBIT? Is this the... Yeah, IBIT's usually the one that I like to look at. And you can even see here the performance of IBIT versus the performance of BITO. You can just see the weakness on that BITO over time. Question from Daddy Trades on CELH. What's on CELH long down here at these levels? People have been trying to find a bottom in this thing for months now, and it just can't seem to happen. I mean, it's still very solidly in a downtrend. This is a bear flag. Make no mistake about it. This is a bear flag. But bear flags can break up. So you could try it long. I don't know the name and the company super well, and I don't really drink energy drinks. But I do think that there's a degree of value at this price that the stock actually has. Do your own research on it. When it comes to trying to pick like a bottom in like a growthy, meme is that a word? Meme, type of stock when it's breaking lower, you certainly have to be very careful because they can just kind of keep going down and down and down. There's a lot of examples of that from stocks that peaked out in 2021. So you want to do your research and try to figure out where you think, and I think that this is worthwhile in doing, where you think that there might actually finally be some fundamental value. If it wasn't at 80, is it at 33? And I just don't know enough about the company. Technically, though, this is a bear flag. This is a bearish consolidation. It indicates continued lower prices. Looks like it tried to move higher on Friday, but failed. That's always a concern. There's still a lot of sellers there that were able to bring this thing back down from that move. I don't hate the idea, though, if this thing can base out a little bit better and doesn't break down from this pattern to start to build into a little bit of a long. Really, your confirmation comes in, I think, above the high of September 4th. You need this thing back above 37.60, and then it'll start looking good again. If you can do that, you're negating this high volume negative Maribozu, and you're back above those moving averages, and obviously the bear flag at that point has failed and broken higher. So that's what I would look for some degree of confirmation. Don't hate it, but recognize that it's very clearly in a downtrend. What was my best experience from vacation? Ooh, I had a lot of good experiences. I had a lot of really good experiences. I did a lot of really cool things. I enjoyed seeing some of the cities. Tokyo and Osaka in particular were awesome. Kyoto I thought was just okay, but also I don't know, had a really cool experience in the Tokyo Golden Guy area, just being out drinking till like 5 o'clock in the morning with some locals, which was really, really cool. But then I was also I stayed in like a temple lodging in Koyasan, which was a really cool experience I've never done before. And then I went down to Okinawa. I was like snorkeling with the coral reefs and stuff, and I climbed up to the peak of the highest mountain in Okinawa, which was also really cool. So I don't know what the best experience was, but those were some of the highlights. So thanks for asking, Robert. From Apex Joy in the YouTube, do you think if Adobe can swing long for a quick rebound? Have not been following Adobe for quite some time. The chart looks really sloppy to me. You have a very big range kind of between 500 and 600 roughly, and you're at the midpoint of that range. I don't know what happened with the stock on Friday that caused this really big gap down, because again, I was on vacation. I'm just catching up on news. So I would want to know what caused the gap down, but also I'd say broadly between 500 and 600, this thing looks like a coin flip and looks very hard. So I would probably just stay away from it. There is some downside extension that you might be able to take advantage of. Okay, well, that's some good trading there. I did not put on any carry trades when I was in Japan. Adobe was earnings. Thank you, Cyril. Popping back over to the VTF. From Lou, great call on Intel. Question about execution. I got in at 1985. However, you mentioned getting in the first 5-minute bar. I guess my question is, what entry execution you see most success? Intel opened above the previous day's high. So it was above the 1980 entry in the morning alert. Yeah, so I didn't really watch it in the first 5 minutes, but um, the two spots that I was looking at is 1980, and that's kind of just the gap fill-ish area from yesterday after there being positive news, and well, I think there might have been an inside day also. No, it wasn't. Never mind. 1980 I was looking at, and I was looking at a potential buy through 20 for momentum. Keep in mind that when I put out those alerts pre-market, they're the levels I'm talking about are kind of areas. They're a little general. They're general zones that I think are important. It's not necessarily going to be like, to the penny, 1980 to the penny. It's kind of just going to be the zone that I'm paying attention to. So then you need to kind of figure out your entry execution when you understand those zones after the stock itself actually opens up for trading. So again, didn't watch it in the first 5 minutes closely just because I had some other things on my radar. So Rex or Rich or some of the folks who were in it might be able to give you even better feedback on how they executed it. But I can tell you that very roughly, having not watched it at the open, if I'm looking at this like 1980 to $20 area, and I see, off the open it opens up above 1980, trades down to roughly that 1980, overshoots it, but is tailing back up, I like the idea of buying that tail up versus the low. So that would be one way to do it. Just buying, let's call it 1990, maybe upper 1980s, low 1990s versus the low of the day after it put in the low of the day on the way up. Or buying then through 20 on the way up after it put in that low versus that low, knowing that 20 is also kind of the important, more momentum spot. You then have real confirmation that this tail is in, that it held that 1980, and that you can look for execution for continuation. So that would be the two ways that I would look for it. Appreciate the question. Hope it helps. From Ian, what are some key things to be cautious about when trading volatility ETFs? So feel free to give me any examples of any that you want me to look at in particular. But the problem with all the VIX related ETFs is that they have very heavy decay. So none of them are good for like swing trading unless you want to be short. But the problem with being short those names is that they're almost always hard to borrow. None of them are really good for swing trading to the long side because you fight the decay. It's actually one of the areas where I think that you may have a stronger advantage trading options, and you can maybe trade the VIX itself, like options on the VIX itself, and just not even deal with the VIX ETFs, just because again the decay on them is so crazy. So when you're trading, the VIX ETFs, if you're trading UVIXI as an example, you're really looking for short-term trades and short-term catalysts. So these are things that you want to day trade when it's really strong because the market's really weak, or maybe like a few-day swing trade. Take advantage of, it's an extreme example, but taking advantage of what happened at the beginning of August as an example. You see it really going, you see the market breaking down, the VIX breaking up, and you just, buy the momentum and kind of go with it. Otherwise, you don't want to be stuck in these things because they will just decay out over time and you will eventually be out of the money. So they're really garbage products, and generally I try to avoid trading them. And the only time that I really try to trade them is if I think that there's a catalyst that's occurring that can give me a very fast move in a very short period of time, because this product, this UVIXI product, is just as an example, has the capacity to give you moves that are 100%, 200%, 300% in a matter of just a couple days if you actually time it right. But if you don't time it right, or you overstay your welcome, you will bleed out all your open profits, or just bleed out losses to begin with. So that would be the biggest thing that I would be cautious about when trading any of these VIX ETFs. UVIXI is the worst one because it's not only going to decay by nature of its product, it's also going to decay by nature of it being a levered ETF, but they all do that. So that's one of the things that you want to be cautious of. It's the main thing that you want to be cautious of. It's unfortunate that there's not like a good VIX ETF product, but I think it would just be impossible to build out. Otherwise, it would have been done already. Thank you for the question, Ian. Back over to the YouTube channel. From Cyril, I'm struggling with managing the trade properly and exiting too early. Is the best way to fix it is to have the trade plan written down and stick with it to the letter? I think so. I think your question is asked and answered. So most of the time, so the two main reasons why traders struggle in this business are because of either a failure to manage risk properly, meaning they hold positions beyond their risk limits, hoping that they come back in their favor, or exiting too early on the upside, exiting too early on the profit side. And I think that the number one way to counter either of those problems is through good game planning. Have a good game plan written out that dictates what you are going to do with every single trade. And then, sometimes the harder part is to have the discipline to follow it. But that the discipline to follow your game plan is certainly easier, I think, when you have it written out already. So if you really write out that plan as opposed to just, getting in the trade willy-nilly and I'll see how it, having that I'll see how it goes mentality, the I'll see how it goes mentality is a recipe just to not get out of your losers when you're supposed to and get out of your winners too early. So, yeah, I think that's exactly the right thing to do. Your follow-up question, how do you separate mentally the intraday smaller trades and the longer picture? Do you also write down the trade plan somewhere? And how do you keep track of all the trade plans you have? Yeah, I mean, that you also asked and answered, I think, on this one. I keep track of it. I keep track of it each evening for anything I have longer by spreadsheet. I just have a spreadsheet that I update at the end of each day with where my swing trades are versus my game plan. The intraday stuff I just am able to keep track of mentally in my head at this point. I know what stock is meant for an intraday trade versus what's meant for bigger picture or whatever, and I'm pretty good at not messing that up. If you're not at that point yet, though, it may also make sense just to really be writing things down, also what you're doing intraday and overnight, and just having that there separately so you don't mix it up. It can certainly be confusing to have like two trades on in the same symbol at the same time, even though I do it. Meaning one trade that's meant as a day trade on a small time frame and one trade that's meant on the big time frame. And if you find that you're struggling with that, then just maybe trade a different name. Usually you can find a different symbol that trades with your same thought process. You're looking at NVIDIA, so you trade the Qs, or you're looking at NVIDIA, you're already in a NVIDIA swing, maybe you trade NVDL as your day trade, so that way you're able to separate it by being involved in different products, but it's the same general thought process and game plan on your trades. So that would just be some advice. Uvixi Bull's upset that I'm back. He wants Pat. Pat, they want you, Pat. We'll just have to have Pat do more meetings even when I'm back. I don't mind. Alright. Anybody else have anything? Otherwise, I'm happy to wrap it up. I'm moderately jet lagged. I got a good night's sleep last night, though. So, hoping to be back fully mentally in the swing of things real soon by Wednesday's Fed day. So I guess we'll wrap it up there. Have a great night, everybody. I will see you all tomorrow morning.